Hey, what's up? Welcome back to another video. My name is Winston, and for this video, I'm going to be going over how to come up with a moving average trading strategy. Okay, so there's multiple ways that you can use moving averages to trade in your trading. I'm going to go over 3 different ways that you can use the moving average. And I actually have ChatGPT pulled up and I asked it what are 3 ways that you can use moving average to use for trading. Okay, so I went ahead and typed in the question and we're gonna go ahead and dive right into the answers that it gave me. It says, "Hi Chat, can you give 3 ways to use moving averages when trading Forex? Please be detailed." And as you can see, it gave me 3 different answers here, and I'm gonna go ahead and go over the first one. The first one is trend identification. How it works: moving averages can be used to determine the overall trend direction of a currency pair. The basic idea is when the price is above a moving average, it indicates an uptrend, and when the price is below the moving average, it indicates a downtrend. It gave 2 different examples of how to use the moving average to find a trend. So it gave the option of using a SMA of 50 or an EMA of 20. And essentially, if the price is above that line, that means that the trend is bullish. And if the price is below that line, that means that the trend is bearish. Okay, so I went ahead and pulled up a chart on MetaTrader 4. This is the Euro USD 1 hour time frame. And I went ahead and applied the moving average of 20, and this is the estimated moving average. So as you can see, the price is constantly above this moving average, so right now it is bullish. So I would be looking to place long orders during this time. I did want to kind of go back and look at some of the previous activity. So I'm kind of looking to see what the chart has been doing in the past. So it looks like right here in this area it is above, and then right here during this time it looks like it was trading sideways, and then it took a plunge, and then it started to go back up, and that is kind of what caused it to go bullish again. But you kind of want to be careful about trading during these times. It looks like it might have been trading sideways for a while, and then all of a sudden it went bearish. And I actually want to go. Okay, so this is kind of a better example. So during this time it looks like it was kind of sideways. So you kind of just want to be careful about using the EMA or any type of moving average, because if it's going sideways, you may just want to not place any trades until you get a strong trend, like we did in the beginning, like this. So if the trend is bullish, then that means that you will be wanting to look into buying or going long. And if the trend is bearish, then that means that you will want to short or put in sell orders. Now I'm going to go ahead and go over the second option on how to use moving averages, which is going to be the moving average crossover. And the moving average crossover is probably one of the more popular ways to use moving average. So let's go ahead and see what the explanation is on that. Okay, so it says moving average crossovers. How it works: a moving average crossover strategy involves using 2 moving averages of different periods. A common combination is 50 period moving average with the 200 period moving average. When the shorter moving average crosses above the longer moving average, it is called a golden cross. I actually did not know that. That's something that I'm just now learning myself. A golden cross, and may signal a potential buy opportunity. Conversely, when the shorter moving average crosses below the longer one, it is called a death cross and may signal a potential sell opportunity. Okay, so I actually never heard of, what was it called? The golden cross or the death cross. I've always just used it as going long or going short, but I've never actually heard them call it by names like that. But basically, when the 50 moving average crosses above the 200 moving average, you just want to go long. If the 50 crosses below the 200 moving average, then you want to go short. All right, so in the last clip, I used the red line, and the red line is the 20 EMA. So I went ahead and placed another line on the chart, which is the purple line. That purple line is going to be the 80. So it doesn't necessarily always have to be 50 and 200, but it can be any combination that you feel comfortable with using. And I'm gonna go ahead and scroll to see when the moving averages. I'm gonna go back and scroll to see when the moving averages cross over. So as you can see right here, during this point, the 50 crossed above the 80, and it crossed above when this candlestick formed right here. So more than likely, you will place a trade at the close of this candle. So right here in this area is where you would go long at, and as you can see, it went long for a good amount of time. So yeah, that's how you would use the crossover strategy. All right, so we're gonna go ahead and go over the third way to use moving averages, and this way is using the moving average as a support or resistance level. And resistance levels, how it works, moving averages can act as a dynamic support and resistance levels. During a strong trend, prices often retract to the moving average. Notice it says to the moving average before continuing in the direction of the trend. Traders use these retractions to enter trades in the direction of the trend at a better price. Traders use these retracements to enter trades in the direction of the trend at a better price. So I wanted to make sure that I put an emphasis on retracting back to the moving average, because that's highly important. So that essentially, if the price is above that moving average, that means you will want to go long. But when the price is retracting to the moving average, that is when you will want to actually place your trades. I'm gonna go ahead and show this on the chart so that way it'll be easier to understand. I'm gonna go ahead and continue using the red line, which is the 20 EMA, and as you can see, it is currently above that. So you'll want to be looking to place long trades. So during the times when the price is going, is going to be above that line, but then there will be times where it actually will retract and it will go down to touch that line. That is actually where you will want to place your trades. So for example, right here, when this bearish candle formed, it actually touches the EMA, and when it touches the EMA, that is when you will want to place a trade, and you will want to carry that trade on until it pretty much makes another bearish candlestick, or whenever you hit your take profit, if you have a take profit set. And here's another example of when to buy in retracting. Here's another example of when you want to buy in, because there was another retraction right here where the price touched that 20 EMA. So you will want to buy here, and then you will want to carry on until your take profit is hit, or until another bearish candlestick forms. So chat actually gave some additional tips on how to use the moving averages outside of the three main ways. So I'm gonna go ahead and go over that. All right, so I'm gonna go ahead and scroll down to where it says additional tips. So multiple time frames, consider using multiple time frames. Consider using moving averages on multiple time frames, such as 4-hour and daily charts, to get a clearer picture of the overall trend to avoid false signals. That pretty much goes back to how you use the first example, which is to use it finding a trend. You'll just want to use it on a longer time frame. And then right here it says combined with other indicators. Moving averages are more powerful when using in conjunction with other technical indicators like RSI, MACD, or trend lines to confirm signals. And you can also use the moving average as a trend line. So you can use it with trend lines that you draw on your chart, or you can use it as a trend line itself. So I kind of wanted to make this video short. I just kind of wanted to give a quick example on how to use moving averages. Just be sure to like, comment, and subscribe for more content like this, and make sure you stay tuned for other videos.